So first, just a little bit about me. My name is Tom Powiewski. For those that don't know me, I'm a realtor by profession. In my previous life, I actually was a chartered accountant. I graduated from Wilfrid Laurier University in 2005. And from 2006 to 2011, I was a practicing accountant. And in 2009, which I'll go through a little deeper, I bit the investing real estate bug and started in flipping and in long-term rentals. And in about 2011, I liked what I was doing so much that I decided to make the transition from being an accountant to an agent. And again, I'm a full-time realtor. This is all I do. I don't practice accounting anymore, but I do have a lot of knowledge and understanding about how accounting works. And since 2011, I've done over 1,000 transactions for various clients. We've helped them move and buy, for example, investment properties. And as you can see from the photo there, my passion are the Toronto Blue Jays and my two boys there, Nick and Alex. So as I mentioned, my journey or path to real estate first started in, I guess you could say 2005. So I graduated from Wilfrid Laurier University, which seems like ages ago, 15 years. From 2006 to 2008, so I wrote my CA exams. I worked for a company called Deloitte & Touche. So I took the corporate route, had a full-time job that worked a lot of hours. And what I discovered when I was working, I'm sure a lot of people can relate to this, is I found out quickly my salary was not enough. I had a pretty decent salary, but there were things that you didn't think would amount to much, but they did, such as taxes, such as personal expenses. So I was already thinking about, well, how do I grow my income? How do I grow my wealth? And I decided to venture in something called the stock market. And from 2006 to 2008, I thought I was a genius. I mean, you couldn't do any wrong. The stocks for certain companies just kept rising. This is a chart here that depicts US oil prices, how they went up to $150. If you've noticed lately what they are at the pumps and what oil is today, it's about 20 bucks a barrel. It's incredible how things have changed. But nonetheless, the prices kept rising on stocks, especially on, if you remember these names, Research in Motion, Agrium, Potash. I mean, it was honestly, it was very easy to make money then. And I thought I was a genius. And then I got a rude awakening in 2008. There was a financial crisis. The stock market collapsed. Literally, within a short amount of time, we saw that, for example, indexes dropped by 40%. Commodity prices dropped. We had certain financial institutions collapse. It resembles a lot of what's happening today. I've done this presentation a couple of times in the last year, and it's interesting how things are starting to look very similar to how they are today. I'm sure you've been following the stock market and how it's been behaving. So I didn't want to give up there just yet, but I did lose faith in the stock market, quite honestly. But I decided to take a different path, and this time it was real estate. So I took what I had, I saved a little more, and in 2010, I purchased my first rental property. So Dion mentioned the ugly duckling. I bought the ugly duckling in 2010, a semi-detached home in Oshawa, 3 beds, 1 bath, and was, again, only $133,000. I put $30,000 to the down payment plus closing costs. And I know what some of you are thinking is like, this is a no-brainer, Tom. Like, I'd buy a house for 130 grand in Oshawa. I mean, that's amazing. Keep in mind that even back then, we had some fears and concerns. There was still some instability. For example, GM in the auto sector. I mean, they were getting bailouts back then. We also, even for me being a first-time investor, I didn't know much about finding and screening tenants, and also was managing from a distance. So these are some of the challenges that I was undertaking then. Nonetheless, I did rent the property for $1,225. And what I liked about it was cash flow positive. What that means is that the rent covers all my expenses, and I'm left with something at the end of the day. So if we kind of break these numbers down, you see my mortgage was a mere $332. I'm sure everyone would love that. My monthly insurance, my property taxes broken down on a monthly basis, and R&M means repairs and maintenance, because you're always going to have some repairs and maintenance. Net, $521 per month. Now, that is fairly extreme, but this is, again, my example here, what it was back then. And when I say extreme, it's because that's what the market was then. You could get better cash flowing properties. The point being is, what I like about cash flow positive properties is that they weather the storm. So in case there is a downturn in the market, my tenant is paying and covering my expenses while I wait things out. So this is the power of leverage. So Dion talked about this earlier, about refinancing. So in 2018, this ugly duckling house, we decided to do a refinancing, and the bank appraised it for $395,000. From there, I was able to pull out $228,000. And if you remember, my initial investment was just shy of $30,000. So you can see how effective this strategy has worked for me since 2010. And to be honest, I still own this property today because I can't find returns like this anywhere else, quite honestly. And at the same time, here's what's interesting. Rents didn't stay stagnant in these last 8-10 years. You'll see here, our rent today is $1,750 per month, and my cash flow is about $1,000, okay? And so what the lessons here, basically, what I've learned from my experience is that the cash flow is king. I mean, ultimately what you want is a property that will weather the storm during a crisis, okay? There's also the power of leveraging and refinancing, so 5-to-1. So you see the example there where we're able to extract equity and we're able to reinvest that in other investments. And that's what I did with that money, essentially, is I invested into more assets. The other thing I noticed, which I didn't think about at the time, is that rents increase faster than you think. And they have been growing quite large and quite a bit in the last couple of years by 10%. So it's not a bad idea when tenants move out, because I used to pray, I'm like, please, like, don't move out. I don't want to be bothered with finding a new tenant. But I've grown so accustomed and I've developed a system of finding and screening tenants that I'm okay if they move out every 2-3 years. In fact, it gives me an opportunity to readjust my rents to market and get better returns. The one thing I want to also highlight is that this is a get rich slow strategy, and it takes about 2 to 5 years. So it's kind of like the story of the tortoise and the hare. This is the tortoise, but eventually it crosses the finish line, and without knowing it, when you're not even paying attention, you notice that there's these compounding effect, which Dion alluded to earlier. Okay. The other thing too I'll mention is that there are different strategies for different investors. What I mean by that is there are certain rental properties that are more active and require a little more maintenance and management. And there are certain ones that are a little more passive, such as condos, for example, in Toronto or any sort of city. Basically, they're a little more passive in nature, don't require as much sort of hands-on management. And the last point is being a landlord is all about mindset, meaning that what I learned from my experience too is that problems do come about, but I've gotten so used to now dealing with certain issues that have come about that it doesn't bother me anymore. I remember I had an issue with that ugly house where a raccoon snuck into the attic, and when I got the phone call, I was like, "Oh my goodness!" Like I started to not really panic, but I got stressed out about it. And it was my father actually who kind of sat me down. He's just like, "Listen, if you want to make money, you want to be in business, you got to sometimes deal with some crap, okay?" And from then on, I've just learned that it's as easy as picking up a phone and just hiring a professional to get rid of that raccoon or getting rid of that problem. And honestly, I've never looked back.